As investors, it's not enough to find a stock that we look at and say, okay, I love this stock. We have to actually compare that stock to other stocks within its industry to understand if we're truly getting a good deal or not. Welcome to Stock Stories. In today's video, I want to do exactly that. Today, we're going to compare Hyatt stock and Marriott stock. Hi there, my name is Alex Mason. I am your stock storyteller. On this show, we decode the business behind the stock, and we're going through the entire S&P 500 and looking at other investing concepts to help you become a better investor. So today, we're talking about Marriott versus Hyatt. Marriott is a company that was covered on the podcast years ago, actually. So go ahead and check that episode out if you haven't already. Find the link in the description. And then Hyatt is a company we covered very recently, just a few days ago, in fact. And so we're going to look at the two stocks together. Okay, the first thing I want to look at is the relative size of these businesses. How are they compared to each other in terms of size? So let's go ahead and take a look. All right, I'm here now at the ticker terminal, and I'm going to look first at Marriott here. Let's go ahead and look at just the revenue. You want to get a sense of how big these businesses are. Now, Marriott is interesting. It's kind of in the $5 billion range as far as revenue. Of course, COVID took a big hit. And then in 2021, they got back to about $3.5 billion, not quite getting there where they were before. But this is certainly a big business. They're making billions of dollars in revenue. Okay, now contrast that with Hyatt. Let's go ahead and look at Hyatt's revenue. As far as their revenue goes, very similar trend, right? Doing all right in the few years before COVID, not massive growth, but then big drop, and then now they're recovering. One thing that I find interesting, and you don't see this in the bar chart here, but if you go down this last 12 months column, it tells you, okay, in the very recent past, how much money have these businesses been making? Hyatt has $2 billion in revenue. Now for Marriott, if we do the same thing, they have just under $4 billion. So that tells me as an investor, okay, Marriott is probably about double the size of Hyatt as far as revenue. And this is interesting to me because Hyatt actually seems to be doing a better job at coming back from the pandemic as far as revenue. Even though it's not as big of a corporation, they're getting a lot closer to that $2.5 billion number that they had in 2019 for revenue. Whereas look at Marriott, as far as their total revenue, in 2019, they had over $5.3 billion in revenue. They're really not even close to that. They're still down in the $4 billion range. So it seems like general secular trends are the same. Hyatt seems to be recovering just a little bit better than Marriott is as far as revenue goes. I want to turn your attention now to something else that I found interesting. This is a clear difference between the two corporations and how their businesses work. Now, one thing I want to look at here is on the income statement, operating margins. I've got Marriott here. Notice how their operating margins stayed positive throughout this entire cycle. They actually went from around 53%, and then of course they came down over time as things got harder, and now they're bouncing back up to around 50%. Now, to me, that's pretty good. And remember, operating margin, this is a measure of profitability. So how well is the business turning its revenue into actual income, into cash? If we look over here at Hyatt at the same thing over the same time period, their operating margins follow the same trend, but here's a clear difference. Before the pandemic, Hyatt's operating margins were really not that good. They were only 9%, 13%, 7%. So that tells me they're not quite as good at converting that revenue into cash as Marriott is. Here's another difference I want to share with you. Okay, I'm over here now at this website called macrotrends.net, and it's really good at showing me the shares outstanding over time. So here we're looking at Marriott's shares outstanding all the way back from 2009 all the way up to 2022. And we can see these big trends. It's like, wait a minute, what happened? So the company had over 373 million shares outstanding all the way back in '09. They gradually bought back shares, bought back shares. That's what we love to see as shareholders. And then they had this big dilution event in 2017. I'm not really sure what caused that. But then over time, they started buying back shares again. But look at what happened during the pandemic 2020, 2021. They kept their shares outstanding pretty much flat, which was great. That means that they weren't diluting investors during this time. They weren't trying to raise cash by selling off more of their company to the general public. So that's a good thing. Now let's go ahead and look at Hyatt now. Okay, same website, but now we're looking at Hyatt. Hyatt's interesting. Over the very long term, they've done an incredible job at bringing this shares outstanding count lower and lower and lower. They haven't had any dilution events really until, okay, 2020, 2021. All right, now they sold a little bit more stock. Now, during the pandemic, things were actually pretty good. The company did not dilute their shareholders that much, which is great. But what's this little uptick here? They're diluting shareholders. Is that a really bad thing? Well, the answer here is no, because we have to look a little bit further to the story. Hyatt actually made a big acquisition this past year of a company called Apple Leisure Group. And because of that acquisition, we would expect that there's a little bit of dilution. But it's interesting to note here the differences between these two companies. I mean, Marriott, they buy back shares for a while and then they do a big dilution event because of maybe a merger or something, and then they buy back some shares again, but then they kind of don't do it for a while. Hyatt, on the other hand, they seem pretty relentless at reducing that share count over time, over long periods of time. And they've been pretty good at doing that. I think the only reason they didn't do it over the past couple of years was because of COVID. But I fully expect that Hyatt will, in time, resume their share buyback program and resume their dividend. So that's another major difference between the way that these two management teams are handling the capital. So those are some key differences between the two companies fundamentally that I think are worth noting. The revenue is different. Marriott's about twice as big as Hyatt. The operating margins are different. Marriott is definitely more profitable than Hyatt is. And then third, as far as share dilution is concerned, Hyatt has done a great job with buybacks over the long term, whereas Marriott has been okay at that. So what's the better buy? I mean, Marriott has dozens of brands. They've been around forever. They have a really solid system of generating cash flow, even during hard times. So I think Marriott is probably the safer stock to choose. However, I think over longer periods of time, you're going to get more returns with Hyatt. Now, Hyatt has an opportunity to improve their margins from here. I mean, they're already, I think, a good business. They just need to maybe bring in the profits a little bit more. But also notice here that Hyatt is definitely a big brand, but they're one of the smaller ones of the big hotel chains. So I think they have better prospects long term for growth than a company like Marriott. Another thing I really like here is that it seems like Hyatt is really focused on bringing value to shareholders through share buybacks. And I like this, that over the long period of time that we saw, Hyatt consistently, very consistently, almost every quarter, reduced that share count. I think that that share buyback trend combined with improving profitability, combined with revenue growth over the long period of time, whether or not, there's a recession in the short term, I don't know. But over the long period of time, I think Hyatt's going to do well. They have a lot of good brand strength. And I think that ultimately they're going to perform better than Marriott over a long period of time. But Marriott's going to give you more safety, most likely. Now, if you haven't already, check out the Hyatt video that I did right here. I break down the history of the company, its business model in a little bit more detail, and then we look at some other aspects of the financials that I think are important to know. So go ahead and check that video out right now, and I'll see you over there on the next one. Bye.